Good afternoon, everyone. Thank you very much for joining us. We're just going to wait a couple more minutes to kick off properly whilst we're waiting for people to filter in. Whilst we're doing so, it'd be really great if you could leave in the chat, tell us who you are, where you're from, what you do, and we can get a really nice sense of the type of folk that have joined us this afternoon. And what I'm going to do whilst we are waiting as well is I have got some bit of audience interactivity to kick us off too. So let me see if I can do that. So I think we will just kick off. So good afternoon, everyone. So thanks again for joining us. I think it's fair to say that most organisations represented here today are seeing the effects of financial pressure firsthand, whether you're working in banking, housing, local government, utilities, debt advice, or the charity sector. You're probably supporting more people with more complex needs than ever before. And the challenge isn't just around that financial hardship is becoming more widespread. It's also becoming harder to identify, harder to navigate, and harder for people to talk about. And that is why we are here today. So over the next 45 minutes to an hour or so, we'll look at what the research tells us about financial vulnerability across the UK, some of the barriers that people face when trying to access support, and what organisations can do to identify people and help people earlier. We'll explore some practical examples of what's working today, drawing on perspectives from research, financial services, and frontline debt advice. And we're really fortunate to be joined today by Kitty Newman from TSB and Vanessa Northman from Step Change, who bring a huge amount of experience and expertise to this conversation too. So our aim of today is to keep it nice and practical, nice and useful, and hopefully you leave with a better understanding of the challenges that people are facing, but more importantly, some ideas and approaches that you can take back to your own organisation. Right, so to kick things off, I am going to try this thing. I've got a word cloud that I wanted to launch, and what I want to do is I want to get people's views on this call of, let's see if this is working, of what is the biggest barrier preventing people from accessing support today. So just in one or two words, from your perspective, tell us what you think is the biggest barrier preventing people from accessing support today. And it's my first time trying this, so let me know if it's working or not. Oh, here we go. We can start seeing the words coming up. So the first one that we've got is pride, help, accessibility. Digital exclusion, stigma, which is a really interesting point we'll be touching on later on. So we see pride coming through, lack of options, knowledge of services, limited IT skills, accessibility, mental health, eligibility, fear, it's a really strong emotive word, lack of resources, services are under-resourced. Okay, brilliant. We see some sort of common themes that are coming from there. Let me ask one other poll as well. So when it comes to your specific organisation as well, what's the biggest challenge that your organisation faces when supporting people experiencing financial hardship? So when it comes to your perspective, your role, your organisation, what's the biggest challenge that your organisation faces when supporting people experiencing financial hardship? So what we've got coming up at the moment is engagement, fair assessment, funding, ability to have time, deficit budgets, speed of response, demand, white goods, energy hardship, mental health again, access and resilience, appropriate advice, lack of funds, lack of funding seems to be one of the key ones coming up. Okay, and final question to ask everyone as well. When you think about financial vulnerability today, what is the first word, one word that really comes to mind? So when you think about financial vulnerability today, what's the first word that comes to mind? Everywhere. That is a very, very typical point, actually, which we'll come on to. Poverty, endemic, mental health, hardship, struggle, common, debts, UC, endemic, despair, mental health. Poverty being the central point there. Inequality, crisis, struggle. Okay, so we'll come back to some of these word bubbles later as well. So if I just, move on. So today we've got, as speakers, as I mentioned, we've got myself, Dave Farquharson. I am Director of Partnerships at Lightning Reach, and I'm going to be going through the key findings and implications from some of the research we've done together with TSB and Step Change. We're joined by Killy Newman, who's the Head of Customer Outcomes and Vulnerability at TSB, who will be sharing TSB's perspective and supporting vulnerable customers. And we're also joined by Vanessa Northam, who's Partnerships Director at Step Change, providing sort of frontline insight into the realities of debt and financial hardship. So let's dig into some of the research. So the headline really is, before talking about solutions, it's really understanding the scale of the challenge ahead of us. So together with TSB, we surveyed about 2,000 UK adults to understand how people experiencing their finances today and where they turn for support. And the headline figure is really, really stark. Almost 4 in 10 adults say they're financially worse off than they were this time last year. And this really isn't about a cost of living story anymore. We're walking from one crisis to another, and we're seeing a sustained financial pressure becoming really embedded in people's day-to-day lives. And what struck us most wasn't simply the level of hardship being reported. I think in some of those word bubbles before, we saw that word endemic. It's really how many people are struggling silently and how difficult it remains for people to access the support when they need it. When we look deeper into the data, what became clear is that financial pressure is no longer affecting a small group of people. 2/3 of adults told us they're worried about the finances in the coming months ahead. Almost a third have already cut back on essentials such as food, heating, or energy. A quarter are dipping into their savings to manage everyday costs, and 1 in 8 say their debt is becoming difficult to manage. And traditionally, organizations often focus on identifying people once they're already in serious financial difficulty. What the data suggests here is that vulnerability starts much, much earlier. People are adapting, they're coping, they're making sacrifices long before they appear in debt advice statistics or formally asking for help. And for organizations, what that means is that we need to get better at spotting vulnerability upstream rather than waiting for people before they hit that crisis point. One of the most important findings in this research as well is that we often assume that if support exists, people will find it. But the reality is very, very different, where people don't ask for help and that access does remain a challenge. A quarter of people told us that they wouldn't feel comfortable asking for financial support, even if they needed it. More than a third aren't confident that they would know where to turn. And nearly 1 in 5 had given up when applying for support. And when we asked why, in terms of abandoning that sort of application, the answers weren't really that surprising. The process felt too long, it was too complicated, or people were embarrassed to ask for help. This matters because many organizations need to ensure that they're really paying enough attention to the experience of accessing that support in what is an incredibly complex landscape for people who are in very stressful situations. Another finding that stood out was around stigma. We saw that word come up quite a few times in our word bubbles earlier. We often assume that people talk to friends and family about money worries, but actually many don't. Around a third of respondents told us they aren't comfortable discussing financial concerns with family or friends. And really interestingly, people reported a high level of confidence when speaking with charities, debt specialists, and their banks. And I think that is a really, really important point to really shout about on the call today. On this webinar, we have people from local authorities, energy companies, housing providers, advice services, charities, and more. And it really shows that organizations like yours have a really unique opportunity. People may be more willing to have difficult conversations with professionals such as yourselves than those who are closest to them. And that really places a responsibility on all of us to make sure that those conversations are easier, earlier, and more supportive. So who is most effective? So alongside this national polling with TSB, we also looked at our data from over 300,000 people using the Lightning Reach platform, and the patterns are really revealing. 2/3 of our users are struggling with energy costs, and among those people, nearly 4 in 5 have a disability, and almost 2 in 5 are single parents. And what this highlights to us is that financial hardship rarely exists in isolation. It's often entwined with disability, caring responsibilities, health challenges, housing pressures, and other forms of vulnerability. For organisations, that means support can't be designed around a single issue, because we know people don't live their lives in silos, and increasingly, neither should services. So what do people actually need help with? When we hear the term financial vulnerability, we often think about large debts or severe financial crisis. But what we often see is that relatively modest interventions can have a really significant impact on someone's life. The most common forms of support accessed through Lightning Reach are help with energy bills. It's for things like essential household items like furniture and appliances. And it's also support with everyday living costs. The average reward on Lightning Reach is around £610. And for many households, that can really be the difference between stability and crisis. And one of the lessons here, I think, is that preventative support is often far more cost effective than waiting for problems to escalate. So what needs to change? What should organisations really take away from this? For me, there are 3 key implications. Firstly, we need to identify need earlier. One of the clearest themes from that research is that people are experiencing financial pressure long before they reach a crisis point. 2/3 are worried about their finances, a third already cutting back on essentials, a quarter are using savings to cover everyday costs. By the time that someone's missing payments or seeking that advice, they've often been struggling for months, if not years. The opportunity for organisations is to move from reactive support to more preventative support, and that means creating more opportunities to identify vulnerability earlier before people reach breaking point, where interventions can still have the greatest impact. Secondly, we need to make support dramatically easier to access. The research shows that over a third of people didn't know where to turn for help, and nearly 1 in 5 have abandoned an application for support altogether. And that is not because the support doesn't exist. In many cases, support is fragmented across multiple organisations, websites, forms, and eligibility checks, and people are asked to repeat their story over and over again, often with little visibility of what support they might actually qualify for. And if I'm honest, many support journeys still aren't designed around how people live today. Someone might be trying to access help from their phone whilst travelling to work, sitting in a waiting room, or after putting their children to bed. Yet too many application processes are still lengthy, desktop orientated, and often very complex to administer. We're effectively asking people who are under a lot of pressure to navigate systems that create additional pressure, stress, and friction. And for the organisations who are making the biggest impact, they're increasingly focused on removing that friction, simplifying journeys, reducing that repetitive form filling, and enabling mobile first access to make sure that people are getting the right support more quickly. And lastly, this leads to the third implication of better coordination. So what's striking from this data is that financial hardship rarely exists in isolation. People struggling with energy costs could also be managing a disability and housing challenges and caring responsibilities, but support services often are organised around individual issues rather than the whole person. But the reality is that no single organisation can solve financial vulnerability on its own. Banks, local authorities, housing providers, charities, utilities, community organisations all have a really important role to play. And the challenge is about creating this connected support ecosystem where people can move seamlessly from service to service rather than having to start again every time they seek help. At Lightning Reach, that's where we're seeing really growing demand for joined up approaches that helps organisations to identify need earlier, connect people to the right support faster, and reduce that admin burden on both staff and end users. And that is why partnerships between organisations like TSB, Step Change, and Lightning Reach are really, really important. And banks in particular are increasingly looking about how they can identify vulnerability earlier, support more customers effectively, and connect people with wider sources of help. So with that, I'm going to hand over to Keely from TSB to share how they're approaching that challenge in practice. So Keely, over to you. Do you want to start by just sort of introducing yourself, your role, and what you do?
Yes, thank you, Dave. Good afternoon, and it's a real pleasure to be here. So yeah, I head up the vulnerable customer team at TSB, and that means we kind of set the strategy for how we support customers with vulnerabilities. So that might be things like how we provide day-to-day support through our contact centres, or developing larger initiatives like the Flea Fund that we have.
Brilliant. So Keely, if I kick off and ask you a couple of questions. So what does financial vulnerability look like in the UK today?
Yeah, thanks, David. I think that's a great opening question. And I think the stats that you showed us a minute ago start to really build up that picture. As you mentioned, sort of 2/5 of respondents from the survey felt that their finances have worsened since last year. So we can see that more people are facing into that harder position financially. And it is things like people making changes to the way that they live their lives, to really make ends meet. It's that cutting back, that going without, that using up savings, actually having to change the way that they operate. And one of those keywords that I just picked up out of that word cloud was this endemic piece. And it really demonstrates that we're recognizing that financial vulnerability has got that wider impact over a larger range of people. And I think some of this has been compounded by the unplanned changes, things that people didn't see coming. We didn't know that it was going to happen. For example, we had COVID and the cost of living crisis. And then with the Ukraine war, we had an increased inflation driving up food and energy costs. And then further compounding with the Iran war, where we've had more fuel prices and cost of goods. And this is really starting to impact on that day-to-day life. And I think, again, the word cloud called out that poverty. It's where people are now having to spend more and more of their money on just, getting to work, eating, those kinds of things. And I think it was interesting because there's a stat on the radio this morning from the Food Foundation. And they were saying that for people on the lowest income, they would need to spend 85% of their income on food to meet the government's recommended healthy diet. And that, for most people, that's just not sustainable. And those sorts of things we can't expect people to do. So I think that's why, and you called it out, it's really important for us as organisations to come together to really support those who need that support when they need it most. And for consumers to know that the support is there for them as well. How do they find it? How do they access it?
Brilliant. And you talked about some sort of the wider issues that we're seeing sort of from a macro level, but what else are banks sort of seeing at the moment? We've noticed that banks are becoming much more active as well in the sort of economic abuse space too.
Yeah, economic domestic abuse, we are seeing an increase in that. So one of the things that we have at TSB is a flea fund, and we have seen increased use of that fund since we launched it. And with that fund, we've helped over 1,100 people. And the flea fund really is for customers who are escaping from those instances of domestic and economic abuse. And we can give them a grant to up to £500. And the key things that they're spending that on are sort of your travel, accommodation and food costs. So it's really important that we have those services available. I think other things that we're seeing are sort of very complex cases where customers have got these kind of overlapping pressures. So we've got the cost of living crisis that I was talking about just a second ago, and the energy costs, but then you overlap those with like illness, bereavement, the relationship breakdown, the domestic abuse that you were just talking about, and it just pushes them past their stretching point. You've got money that is there to kind of meet your essentials, and then you've got priority bills, but actually it's just a stretch too far. I think the other thing is that, we were talking about identifying vulnerability, and it's important to remember that this can affect anybody at any time. And it might be temporary where they've lost their jobs, they're going through a divorce, or sort of more permanent issues. And we need to identify those and provide that support at the right time, because otherwise, customers aren't getting that support, and where they've got these complex cases, they need more bespoke support. I think one of the things as a bank and other banks we do is have a tailored support team, and they provide that bespoke care for customers who need additional support. And it's one of the things that I'm immensely proud of our tailored support team, actually, and the ability of our customer facing teams to spot the signs of those who need that extra help and refer them across. And the tailored support team is literally that. It's there to provide a bespoke service where customers may have coerced debt or domestic abuse or really complex needs, maybe suicide, that kind of thing, and they just need that case management. And it's great that banks offer that kind of support to customers. I was going to give you an example of a recent case study, actually, where we had a customer who came into branch and they needed some help with debt consolidation following a change in circumstances. And on the face of it, that looks quite simple, debt consolidation, let's help the customer with that. But she was referred into the tailored support team because they started to uncover that she was fleeing from domestic abuse and was also really struggling as a single parent. And so our tailored support team were able to help her out with the free fund, set her up with the grant so that she could then manage, whether she wanted to leave, get accommodation, those kinds of things. But we don't stop there. We continue to provide that customer with like regular guidance and signposting to other external support services, including things like CV writing and interview prep. And so we could really help that customer in her end-to-end journey to get her life rebuilt and back on track. And I think those are the sort of complexities that banks are facing into and seeing at the moment, and providing that support to customers is really key. So identify them and provide that support.
Awesome. That free fund and tailored support sounds like a really, really impactful measure that you've kind of put in place for your customers. What other advice would you give to your customers who you feel are struggling at the moment?
I think for me, it's about come speak to your bank or service provider as soon as you can. One of the things that we find, and it was mentioned earlier again in that word cloud, which was about sort of the stigma of not talking to people, or that fear, or that worry about discussing your financial situation. Actually come and speak to your organization as soon as possible, because actually it doesn't need to be in a position where it's unmanageable. The sooner you talk to us, the sooner we can help you, and chances are we'll have more opportunities and more avenues to explore if you talk to us up front. And I think, one of the things that you did mention, Dave, was about the respondents that were uncomfortable speaking to family and friends. And I'm just going to reiterate that point that you made, which is about how important it is to recognise how strong we are as charities, debt specialist banks, the people on this call, that people will come to us as that first point of contact, and that we can actually support them at that time when they need us. And it's that support network that we provide. And the more that we can do and the more that we can come together, I think the better we can help people in their end-to-end journey.
And that probably brings me on nicely to my next question, sort of talking about the organisations on the school. I guess what role do you think partnerships play in addressing financial vulnerability?
Yeah, and I mean, it's key, right? And I think you mentioned earlier on, no one organisation can solve everything for every customer, and that's why we need to come together as a collective. As we partner with you guys, with Step Change, and we're providing services to customers that really make a sort of they're a game changer for some of these customers. You mentioned your grants earlier, £610 on average. That's a massive thing for customers, right? If they are struggling. I think the other things that we've done is we've partnered with Hestia and Saving Economic Abuse, and they've helped us roll out things like Safe Spaces and our Flea Fund, understanding what customers actually need, because it's that lived experience element. It's great that we can sit here as banks and sort of say, okay, these are the services we offer, but we need that lived experience. And that's where we get that with partnerships, and then being able to refer customers off into those other support networks is a key thing for us. I think one of the other things that we've done is a kind of annual TSB labs, where we look to work with really innovative firms who we can then partner with to offer key support services to our customers. And we've seen some amazing tools come through that journey. So, we've had tools that, support budgeting or improving household efficiency. And again, for me as a bank, that's something that we need to keep pushing the boundaries of that innovation. What more can we find? How can we help people? And then it's great that we have all this stuff, but it's also, okay, how do people find that support? So, we make it very clear on our website and in our app that we signpost customers to those partnerships. Also through our financial support teams, they will refer customers off to those different partnerships as well. And we need to work closely with those partnerships so that we continually understand how they can support our customers and what services they're providing and how those improve, and also look for new partners. I think the other thing for me at the moment is that UK Finance are running an inclusive design challenge. And this is looking to take sort of great ideas and innovations from charities and other not-for-profits involved within financial inclusion to see how we make financial services more inclusive. And again, this is about learning from those partners, getting that information in. How do we make our products and services more inclusive so that we support our customers? So yeah, absolutely critical service to work with other people. It's about understanding, it's about knowledge, it's about, getting that lived experience.
Awesome. And I guess the final question, just to wrap things up, we've talked a lot about the sort of support there for customers, but I think that headline figure, that 4 in 10 people are sort of struggling at the moment. That would also involve a lot of the colleagues that we might work with at organisations too. So could you talk to me a little bit about the type of things that you're doing to also support your colleagues at TSB?
Yeah, definitely. And for us, again, it's about making sure that our colleagues are supported either from the point of view that they may be going through these challenges themselves, or they are dealing on a day-to-day basis with customers who are also dealing with these challenges. So it's maintaining that sort of colleague well-being. One of the great things that we've introduced as TSB is our carer support. And this is something, again, I'm really proud of. So we offer up to 70 hours, which is kind of like 10 days paid leave, to give colleagues who are carers time off to care for their loved ones. And so it doesn't have any impact on, their income or their holiday pay. This is additional time that they have off. And so they can help with caring duties. They can take it all as one piece. They can take it up throughout the year. And I've seen that firsthand with colleagues that have worked for me and how well that's worked. It's been an absolute lifesaver, I think, in some situations. And we also have the same sort of services available for our colleagues as well. So things like our fleet fund, you don't need to be a customer, you could be a colleague, and we are there to support them. So recognizing that early doors and then providing them with that support. So for us, it's about having the right policies in place, making sure that we've got our colleagues supported, and just having the right services so that they can access them when they need them.
Fantastic. I think the carers leave is such a good practical example of how something can be so impactful to someone who's in that stressful situation too. So that's really, really cool to see. Thank you, Keely. So we're moving on now, and I'll hand over to Vanessa at Step Change to take us through her section.
Thanks so much, and afternoon, everybody. I see from the amount of people who are on the call, and a number of you are working at that front line with people who are really, really struggling. So I feel like I hope I'm going to echo a lot of your first-hand experiences. So I'm pretty sure most people on the call will know who Step Change are, but we provide debt advice and debt solutions across the UK. So I think it's fair to say that people seeking debt advice right now are in a situation that has been really compounded. So it's not, we can't use the word crisis anymore. I think we just got an incredibly high level of cost of living that comes off the back of, an energy crisis, a pandemic, austerity. We could go even further back, but I think I'll try and keep it short and sweet. So what we're seeing is clients are really in acute financial distress, and we are seeing demand for debt advice at unprecedented levels. So just in Q1 alone, 25% up year on year. Now, anyone who's worked in debt advice or in frontline services will know that there is a seasonality. So we do tend to see more people in that first sort of quarter of the year, but we're now in June, and that demand has not dipped at all, and that paints a picture that says to me, we are in, it's not going away, but also there's a potential for demand to really outstrip supply. It was interesting to see that there were others in the word cloud talking about lack of funding or limited funding, because that's a real challenge for all of us. So if you wouldn't mind just going on to the next slide. So again, I've kind of jumped ahead and said a few pieces of this, but one of the things that we're definitely seeing is people who have a deficit budget. And what we mean by that, income below essentials. When somebody comes into debt advice, all debt advisors will take a complete breakdown of everything coming in and everything going out. And we will all build a budget based on, the family composition, the household composition, to look at a realistic and livable day-to-day monthly budget. And then obviously we do the priorities first: rent, council tax, water, energy, and then obviously a livable budget. And then it's about then saying, well, what is left over? Is there anything that you can pay towards your debts? Increasingly over the last 10 years, we see more and more people whose income is not able to give them that sustainable, realistic, livable budget. And, there is no magic wand for any of that. And that's on typically around 35% of people coming to step change for debt advice. I know in other parts of the debt advice sector that's even higher. As I said earlier, financial positions have not improved, so we have a compounding problem. And I think the best example of that right now is the arrears that have built up in energy. So energy prices, it's a bit of a roller coaster, but if you weren't able to afford your energy back in 2022, when the Ukraine war started and we saw those massive hikes and people built up arrears, you're living in an arrears position still, and yet the cost of what you're using is also going up. It's a vicious circle. And, we were really hoping that the debt respite scheme, which Ofgem were going to launch to help write off some of that debt that had been built up, was going to launch. And unfortunately, that is on hold. So there are people, absolutely dreading the winter, although to be honest, the summer's not that great either, because we've got a price cap increase and we don't know where else it's going to go. So that is such a significant problem for millions of people in the UK. And the other piece here is, we talked about what are the barriers. People are sort of entering advice later. There's a lot of misinformation, I think, on social media, sort of influencers telling people what to do. And it's almost impossible for any of the sort of the debt advice organisations or local councils or banks or anyone to sort of cut through that to say, look, forget trying to do a side hustle or just, you need to get into some sort of support or meaningful conversations with your creditors or advice providers. So that's the sort of the status quo right now. On the next slide is just some of our own data and just sort of a snapshot from April. And again, typically by now, we are seeing, in April, May, a bit of a dip, but the volumes are just going up and up and up. So you can see there the number of people having full advice has gone up 20%, 21% in comparison to last April. We're seeing increased borrowing coming through. So we know in the pandemic that lots of people were able to pay down their credit cards because obviously no one could go out and etc. But we now know that borrowing is up on credit cards and personal loans is up by 15% pre-pandemic. And I know a lot of the conversations that I have are sort of saying, well, we're not seeing it in sort of credit card collections, etc., etc. People are still maintaining those payments, but more and more and more of their household expenditure is going on a credit facility. What we're seeing as well is we're seeing a shift here at Step Change is we're seeing more people who are in full-time employment. Now, that's at 45%. It's probably one of the highest percentages we've seen, and we've been around for 33 years. But the biggest change that we're definitely seeing, and I'm sure others are as well, is 65% of the people coming to us have priority arrears. And by that, we mean energy, water and council, and that's around 6,400. So, when debt advice and solutions, were in their infancy 20, 30 years ago, the problems were probably a life shock, a life event, and unsecured credit, and it was a bit of a house of cards. What we've now got is an affordability crisis because people cannot afford the basics. And for those, again, who are in the debt advice sector, there aren't a huge amount of solutions to help with those ongoing bills. And I know us and many others are really lobbying the government and Ofgem and Ofwat, etc., to say, we need some more solutions. So that's what we're really focused on. And then the final slide really is just basically saying, you know, we haven't got the resilience for a lot of the people that are coming to us. We don't actually think anything is going to change in the near to medium term, and in fact we think it's going to get worse. We are looking at the data that we held back since the Ukraine crisis throughout 22 and into 23 to sort of assess, you know, what happened sort of 3 months, 6 months, 9 months, 12 months and beyond. And we are now looking to replicate and sort of say, well, where are we now since this latest global crisis? And what do we predict is going to happen? I mean, I think predictions are maybe not predictions, but sort of directions of travel. And we'll be publishing that in the next few weeks as we look back on H1 data. So it's a pretty challenging picture, and obviously behind all these stats are people who are really struggling to keep their head above water, struggling to feed their children, struggling with their mental health, and many other areas of struggle. But don't have any good news to sort of end on, other than, you know, everybody in the debt advice sector is doing whatever they can to help people, and it does take its toll on advisors as well. And I think, Keely, you were saying earlier about making sure you support your front line as well, and that's something that I think is a challenge at the moment for the advice sector. So that was it from me. Back to you, Dave.
Thank you very much. Thank you, Vanessa, for taking us through that. So that's the end of our sections. So there's a Q&A function. So if you've got any questions for myself, Keely, or Vanessa, please drop them in the Q&A functionality now, and we'll go through them. Just for me to sort of kick things off, I think obviously the picture is quite bleak, to be honest. But if there was one thing that someone from this webinar could take away and an action back to their organization, a question both for Vanessa and Keely, what would that be? What would you want that to be for someone to take something away?
Good question. I mean, I think for me it would be talk to your senior leaders about what you're seeing day in, day out, and maybe get them to spend some time with you and influence them to make sure that, you know, you've got enough resources, they're lobbying for additional support, or if you're running out of support in your kit bag, what else is it you need? So that's what I would be saying, because this problem is not going away.
I think that's a really good point for us. And I think for me is where you have frontline colleagues and you're going back and speaking to those, how can you help them to better identify the vulnerabilities and the support that customers need? So how are you identifying early on that customers need more support? Where can you then signpost them to, and how can you build your network? And I saw a few bits coming up in the chat already about somebody saying, oh, do you help veterans and so on and so forth? Build those networks so that you have those bigger networks and those bigger partnerships, so that you can go out there and provide a wider range of support for the people that you're working with.
And maybe just to kind of riff off that, we've had a question come through about what more could advice agencies and banks do together to identify vulnerable customers earlier. So is there anything you're seeing about the ways to actually identify earlier on?
Yeah, disclosure is one of the big things that we are focused on this year. And I think, again, sometimes that disclosure comes back to the points that we were talking about in the word cloud, where perhaps it's that stigma piece, or people don't want to tell you that they might need additional support. I think there's perhaps a feeling that it might impact the way that, you know, we help them with their money. So what we're trying to do is get that early disclosure as soon as possible. And we're running a range of initiatives this year to improve that and to help customers understand why it's so important for them to disclose to us. So we did some accessibility posts at the beginning of this year to help customers understand the services that we provide. And we've been using social media for that. And then through our contact centres, we do things like proactive questioning of customers. So rather than sort of picking up on the cues that you might hear from a customer, actually actively asking, what additional support do you need? How can we help you?
So yeah, just to build on that, I think I'm not trying to speak for everybody in the debt advice sector, but I think one of the challenges that a lot of the advice sector has is actually having a way to access the right teams in banks, and not just banks, to say, look, I've got Dave on the phone here, he's told me he's got XYZ, I need X, Y, and Z, and the ability to get on behalf of that person to get the help that they need. One of the things that we're really keen is to share, the scale of the vulnerability that we do see. But I think some organisations are really challenged by how they can absorb that data and also act on it. Because obviously, if you're given data, you have to act on it. And I think that's a real challenge, again, for the advice sector. So, 56% of people coming to Step Change have at least one vulnerability, but our ability, and I'm sure others, to get that to the 7 organisations that they owe money to is quite a challenge. So I think that's something for us to collectively look at, and make it easier for frontline advisors to actually get to speak to the right person in the banks. So yeah, that's something that I think it happens in some areas, but it's not consistent.
Thanks. And Keely, we had quite a few questions come through around the Flea Fund. It seems like it's piqued a lot of interest. Could you tell us just a little bit more about that, just in terms of the practical steps? Is it TSB only? Is it non-TSB customers? How could people access it?
Thanks, Dave. Yeah, I noticed a few bits coming through on that one. Yes, it's open to everybody, whether you're a TSB customer or not. You can come into branch or via video banking and ask us for support with the Flea Fund. What we would do is, if you're a current banking customer with us, current TSB customer, we will open you up a new account into which we'll put this money in. It's called a safe account, so that it's not linked to any kind of geography, to where you live, and it's your account, so nobody else can touch it. If you aren't a TSB customer, again, we will open you up an account so that we can credit it with money. And our really amazing branch and video banking colleagues will discuss with you the needs that you've got at that point in time. So it's a grant of up to £500, and we'll discuss with you the sort of needs that you have and how much of that you need at that point in time. The money is yours to spend on the things that you've identified that you need. So whether that be accommodation, food, travel, anything that is required by you at that time. And it might be that you walk out and you've got £300 with us at that point, and then you can come back to us at a later date, and we can then advance the rest of the 500 if it's needed.
Brilliant. What a fantastic initiative. Really, really cool. So we're sort of nearing the end of our webinar here today. So I kind of wanted to leave with one final question. Obviously, we've talked a lot about the challenges, and I would love, if we can, to try and finish on a bit of a positive note. So I guess one for Vanessa and Keely, what is one example of progress that you've seen recently that makes you optimistic about the future of financial inclusion and support?
Oh, I mean, I think for me, it's that organisations, and I think increasingly regulators and government, are recognising the value of the advice sector. I think most notably the energy regulator is really starting to understand, that advice for people who are struggling with their priority bills is absolutely critical. At one point, they were going to put in their new debt standards that they were going to mandate like a warm transfer into advice, and it was like, crikey, if you do that, you're going to need to find millions more in funding. But I think that for me is a good change. I think it's felt like, oh, it's something we have to do, and actually the value and the transformation that it can have on people's finances and their life is critical. So I do feel like people are in government and higher echelons are seeing the value of the services that we all provide.
Good.
I'd echo that, Vanessa. And I think for me, it's actually things like this as well. It's things that there is a greater level of awareness. There's an increased interest in doing more and bringing people together. So we're seeing more of those partnerships spring up. We're seeing people work more closely, seeing people more interested in helping each other out. I've been to a couple of round tables recently with, variety of ministers, and Vanessa, as you pointed out, the government are really getting behind this, and we're getting that momentum and that drive, and there are groups and working groups that are set up to sort of push change forward. So you're right, on the face of it, there are, there are been some bits where it is a bit doom and gloomy, but there are definitely those green shoots now coming through where we're seeing people get together and really build momentum around this.
Awesome. Well, I think that's quite a nice place to end. So my passing note would be thank you all for joining. I think it's been a really, really insightful conversation. Everyone will get a video recording of the session today as well. So please feel free to share it on with any of your colleagues. So again, thank you so much for joining us, and wish you all the best for the rest of your week. And big thank you to Vanessa and Keely as well.
Thanks to you as well, Dave. Thanks for hosting. Cheers, everyone.
Cheers.
Bye, Phil.